Dear fellow trader, in this video, I would like to explain my views for the next 10 to 12 weeks in the market. As you can see it here, we have Nasdaq 100, S&P 500, and Dow Jones. While Nasdaq keep going higher, you can see that S&P 500 closed lower in the past 2 weeks. This is more significant in Dow Jones, which shows that the whole thing is about tech, and most importantly, Apple and Microsoft. Because of their way, they keep moving the indexes higher and higher. So this is a polar increase in the market. If we want to evaluate these tickers one by one, we can look at triple Q and SPY and see that in the daily chart of triple Q, we can see we have a uptrend here followed by a raising wedge, which could be a potential reversal pattern, and we could expect 5 to 13% decline after a breaking below the support line, which is very good opportunity, and it could happen by the end of July. On the other hand, if you are looking at SPY, we can see a consolidation pattern, most probably a diamond pattern, which could be a diamond top. So we can expect more consolidation followed by a downward move of 7 or 7.6% in the next 10 to 12 weeks. This could be because of Apple and Microsoft weight. There is something I want to show you about Apple. If we are looking at the sharp upward movement, in the past two, we reached to a new high, and then we see closure below the previous week. In both, it was bit like less than 0.5% closure below the close of the last bullish week, then followed by a decline. Here we see again we had 40% increase in Apple. Then we reached to a new high last week and closure uh, below the previous week close around um, 0.58%. So this is really important, which could be a potential reversal pattern in Apple. However, I don't recommend to short Apple because they have $90 billion repurchase program, and half of the Berkshire portfolio is now Apple. I did the analysis of Berkshire behavior when markets enter a potent bearish trend. Berkshire tend to rebuy the assets. So if there is going to be a decline in the market, Apple will be very uh, reluctant to go low fast. This couldn't be, Apple may not be the best opportunity to short. You can do it with other tickers, and they can move like 10%, 8% day, while Apple can do this in 2 months. If we are looking at the Microsoft chart, we see that Microsoft also enters the potential reversal pattern. If we are looking at here, 315 could and 310 could be a potential reversal zone for Microsoft as well. Now let's go deeper and evaluate the fundamental reason for this decline. Here you can see the chart for money supply, M2. If you are looking, there was always increase in money supply in the past 60, 70 years. However, this has been changed since last year when the quantitative tightening started. If you are looking at this chart, we experienced the fastest rate of increase in money supply in post-pandemic era when Fed flooded the system with money, then followed by a linear increase in money supply, flattening and decline. What is important that we see the highest rate of decline past months in money supply. This will explain why small and mid-sized banks are getting squeezed because money is the blood for banking system, especially if the banking system if the bank is small. So when the money flow decrease, it will decrease for everyone. And this 1 trillion decline in the money supply affected the smallest bank, which has the most exposure to commercial real estate. So this is really important. This is the fundamental behind my expectation. As you can see, it gets faster and faster. The money supply decline get faster and faster, which could become even faster. And the credit tightening can affect many businesses. Most probably, it affect the businesses which are not profitable the most. So, shorting the shorting opportunity will be the best with unprofitable businesses during this business cycle. Now let's review what could be the potential effects on economy when we see a decline in money supply. It could be cause contraction of economic activity. So where money supply decrease, there is less money available for spending and investing, and this lead to a contraction in economic activity, and individual and businesses have less purchasing power, reduce consumer spending and investment, and can result to lower business revenue, layoff, and decrease production. Add to this lower profit margins, increase interest rate. So we have seen the highest and the sharpest rate hike ever happened in the U.S. history in the past 12 months. And if we are looking at the deflationary pressure, it can cause to downward spiral where businesses cut prices to attract consumer, resulting in reduced profits and further economic contraction, decreased liquidity in all the markets. Recently, we see huge decline in price of commercial real estate and housing market in the cities that have the highest growth in the past 2 years. Now you see up to 30%. In some point, it is now 30% lower than 12 months ago. Now, if we look at the exchange rate, it could lead to appreciate dollar. So any shortage in the supply will lead to increase and appreciation. It could be for dollar. So relative to the other currencies, dollar could appreciate. We know that dollar is now the major reserve currency in the world with 58 to 59%. So this could lead to this contraction in the money supply can lead to appreciation of dollar, unlike what most people think. So now, if we are going to check my forecast for year 2023, you see that I published this on December, uh, last day of December 2022. If you are looking at this, I ask a question about economic cycle and ask which economic cycle are we in 2023. This could lead to the best investment strategy in 2023. As you can see, in that date, even before 2023 started, I answered the question: economic cycle has peaked and we will enter the contraction phase in 2023. Average contraction duration, peak to trough between the last 70 years was 17 months. Once again, I am telling you, you can review this post. It's publicly published. You can see that. So I believe whatever happened in the first 5 months of uh, 2023 was uh, was a correction for the previous downtrend. And from now on, there is a high risk that we see a decline. as you can see in S&P 500, it could be around 8%, 7 to 8%. For Dow Jones, it could also be around 8%. But for Nasdaq, because it moves very faster and sharper, and we have more companies with lower uh, with lower we have more companies with higher P ratio and higher sales to revenue ratio. Any decline in the revenue could cause a very significant change in the tech as well. So this could be followed by a 5 to 13% in the next 12 weeks. These are my opinion about the market. I believe it could help you to make your uh, analysis better, and considering this may help you to have better decisions.